Guys, this is absolutely crazy. There is a huge unnatural increase in foreclosures in the housing market. Data shows that it is up to 700%. You might think, hey, more houses on the market. But then again, this is also kind of bad when you think about it on another way. This article is from Market Watch. In January, there was a 7-fold increase in foreclosure starts as compared to December, with roughly 33,000 loans referred to foreclosure, according to a report from mortgage data and analytics company Black Knight. And then there's more data from real estate data analyst firm Atom Data Solutions revealed that lenders repossessed 2,634 U.S. properties, completed foreclosures in February 2022, which is an increase of 7% from last year, though it's still down 45% from last month. Now, I think these recent surges have to do with people that were placed in forbearance because, due to the pandemic, there was something where you didn't have to pay rent. The government was putting out stimulus, all types of stuff like that. And what I feel is that though their time has ran up, the government's not really helping them that much and not giving them more stimulus. And now, due to inflation, rising costs, they're facing economic hardships. And these people who are able to probably, barely even afford their home before, or I guess in a somewhat comfortable position, cannot afford it anymore. So what happened is there's more and more foreclosures, just kind of like a delay. Like this was inevitable to come. Just like in Houston has had a lot of evictions lately in their area. Like I think it was up maybe like 100%. I had looked on the eviction labs, but you gotta look at it from their perspective. Okay, so they were relying on stimulus, but now, okay, say for they're trying to get back on their feet, or maybe they lost their job due to the pandemic. And now you got rising gas prices, inflation costs way more to buy food, property taxes might go up soon, and your net profit is not catching up. People are losing more. Rent has went up 14%, while the average wage has went up 5%. So there's not a ceiling to where it's both equal. People are paying more and more. This kind of confirmed my suspicions. The people who remained in forbearance into 2022 might be more likely to be suffering permanent financial hardships. When their forbearance end, they're less likely to resume their payments, and they're more likely to end up in foreclosures, says Holden Lewis, home and mortgage expert at NerdWallet. What's more, for many, the forbearance period is scheduled to come to a close, and there's a backlog of loans who are either in loss mitigation or past due. I'm pretty sure these foreclosed properties have already hit the market, and here's what's probably happened. These foreclosed properties hit the market and they were probably at a lower price than usual, and then it was bidded up. Like the buyer desperation is crazy. There's always gonna be a lot of wealthy investor, all cash buyer that's gonna spend that money and bid it up to maybe a regular price home in the current market, as we can see right now. And then in this market, it's less like how much I want this home, it's more so how much do I need this home. People are not so wanting to get their dream home. They're being content to whatever they can buy. It's a matter of urgency. It's more rush. It's more harder to get your dream home because your dream home has so much competition. I'm not a financial advisor, but everything I say, I want you guys to argue and educate with me. I learn with you guys, but I'm just reading you guys the data. So a lot of people will say just rent, but I understand that it's becoming harder and harder to rent because rents are going up, and then people are being forced to actually buy a home because there's low interest rates. So I can't just tell you guys to rent because everybody has their own different situations. If the situations arise for you to do it and you're in the bad scenario and you need to buy, then buy. I understand the rent is going too crazy. The rent is absurdly high. Rent has risen up a lot. And then, it's really like you're being forced into it. Now, let's get back to that article. But in today's market, where a shortage of homes for sale keeps prices elevated, buyers may not necessarily find a steal when looking at foreclosed properties. Banks who own REO homes have an incentive to sell them quickly, but they are aware of market prices and also vested in recouping the value from the home. For buyers considering a foreclosed property, it's important to get the inspection to determine the physical condition of the home. Obtain an estimate for the cost of repairs, which should also determine the offer price they may want to make. Lawrence Young, chief economist at the National Association of Realtors, says many real estate investors are looking for a deep foreclosed bargain. Now, this makes a lot of sense. Real estate investors are gonna want a bargain from these foreclosed properties. So they might see like, oh, if I can get it cheap and then I can just charge it more, then I'm gonna make a good ROI, return on investment. So these things are probably gonna go up, I don't know, like higher than, probably faster than how fast the gas prices rose up. Cause the gas prices rose up like that, super quick. Now, early in the video, the article referenced a data site called Black Knight. Let's take a deep dive into that. While up significantly from December's 4,100, January's start volume was still more than 20% below the 42,800 in January 2020, prior to the onset of the COVID-19 pandemic. So basically what is being said is that we are still below pandemic levels. Okay, there has been a huge surge in foreclosures, but that still doesn't even, it comes close to the pre-pandemic levels, but it's still not there. That just really shows you how much of a seller's market this is. Roughly half of the month starts were among borrowers who were already delinquent prior to the economic impacts of COVID-19, and half from borrowers who became past due in March 2020 or later. If you were already delinquent prior to the COVID-19 pandemic, it's just you had a higher percentage chance of actually going into a foreclosure. Is just higher. So this makes a lot of sense that the ones are the ones that was delinquent prior, and the other ones are up to like March 2020. And then there's a good portion of people that went through, it's skewered because this was people already in economic hardships. So once the pandemic came, it just made it even worse. So these people were probably already going to get in foreclosure or were just barely surviving. Like, this is just like I said, there was delayed foreclosures. These foreclosures were supposed to be, but then they got saved by the pandemic. In turn, the national foreclosure rate rose to its highest level since May 2021, still nearly 40% below its pre-pandemic level, with foreclosure sales completions 7% below January 2020 levels. This next set of data they gathered makes a lot of sense because people act off incentives. Prepayment activity hit a more than 2-year low, falling by 24% from the month prior as rising rates continue to put sharper downward pressure on refinance incentive. So, rising rates, people are seeing rates rising up. They're getting more scared. They don't know if they should refinance their loan anymore, their mortgage, and then it just market like insecurity. That's basically what they're talking about. But here's my final opinion on the housing market. I believe that, we all know that it's not sustainable. Majority of the market is controlled by, is bought out by mom and pop investors. So they wouldn't have that much income if things actually went crazy. Like once a housing market crash comes, it's going to be a mass sell-off. It may be Q4 of 2022, or it may be in the next 1 to 2 years. I know it's going to come within that time frame.